Dynasty trust is a word you should try and remember. This is a fairly recent phenomenon. Most trusts for the entire term of the tax code have a rule that stops them from going past a certain point in time. They call it perpetuities. So previously, if you left money to a trust, you could take the youngest beneficiary who is alive, like maybe a grandchild who's 5, and it could only go for that period plus 90 years, basically. And then the trust has to end because for some reason they didn't want trust to go on further than that. But a recent phenomenon over the last several years, states wanted to attract capital, and these are state laws in a lot of states, Alaska, Delaware, and now there's a myriad of states, to change that rule on perpetuities. And now a dynasty trust can go anywhere from 300 to 400 years before it ultimately has to distribute out the assets. So what does that mean to you? Here's what it means to you. Let's take the $10 million for 2012 you can give to anybody you want, gift and estate tax-free. If you don't do that, and you've already used up your crummy $1 million exemption because you're going to pass sometime in 2013 and forward. If you leave $10 million to your children, what do they get? Well, they owe 55% in estate tax, so you pay $5,500,000 to the IRS and they get $4,500,000. They leave that $4,500,000 to their children, they pay $2,400,000, and that leaves $2,200,000 to them. When they pass, they leave that $2,200,000 to their children. Here's where I'm going with this. Your great-grandchildren get $900,000 out of the $10 million. Let me explain that to you in terms of a dollar. You just left your great-grandchildren 9 cents for every dollar you left your children. If you move this stuff into a dynasty trust, nobody pays estate tax for 400 years. The $10 million goes to your children, and it's $10 million. They live off the interest. That $10 million goes to their children. They live off the interest. That $10 million goes to their children, your great-grandchildren, and instead of getting 9 cents on the dollar, Grandma, Grandpa, you left them $10 million. But I have some other bad news for you. Congress wants to eliminate these dynasty trusts. And it's been proposed several times in the last year and a half. But they, as you know, can't agree on anything. But in 2013, they are going to make some changes in this tax code, and that is high on their list. But in all previous tax acts, if you've already gotten a trust in place, they've been grandfathered. So more than likely, if we set up a dynasty trust in 2012, even if they change the law in 2013, going forward, you should be okay. That's how it's worked in the past. So all we can do is go on what's happened in the past. Our Kuhen Company has been implementing these type of tax strategies for several years. They're very beneficial to the client. The estate tax savings is huge. It's so significant. There's really no reason not to do it. We pay income tax on this money our whole life. And then what happens when we die? The government comes in and takes another 55% of it. That's because dead people can't respond. They can't complain. They're gone. By the time the heirs get the net estate results a year or 2 years later, they figure out that they really got a bad deal from the IRS too. But this estate tax is just a bad thing. And so we can plan around it. We can plan around it with dynasty trust. We can plan around it by gifting and using irrevocable defective grantor trust, by life insurance trust. There's a myriad of ways to avoid estate tax. People just have to make the effort, take the time, and make a few decisions, and we can take it from there with their tax attorney. We're really good at structuring, minimizing estate tax, minimizing income tax, and asset protection. And those are the things our Kuhen Company does better than anybody else.